Hello, fellow traders. Good morning once again. So, due to people inboxing me and telling me to go over the risk management again, I've decided to go on again for you. And this will be the one-stop risk management you will ever need if you have a solid trading system in place and you're struggling with your risk management. Remember, we fail because failure tries to teach us something and failure doesn't apologize. Failure will never apologize to you. It's a teacher, and we've all failed before. So if you really want trading to be your full-time job, then you need to pay attention. You need to learn more than you trade, and you only need to pick out the quality trades based on the system that you're using. So I'm just going to put in a simplest form or simplest terms the only risk management you ever need if you only have a solid plan. This is for educational purpose only. Remember, as I've said, I never do your own due diligence. I never message anybody. I never manage account. I don't mine Bitcoin. I don't trade for people. Okay, so if somebody messages you across all the various social media platform and says pretending to be me, asking you to bring money for them to double, triple, or whatever for you, remember that it's a scam. I've already talked about IPC, Intelligence Prime Capital, how they have scammed investors over 700 million, which they are going to get into trouble and go to jail for a long time. So remember, there are so many scammers out there who try to get your hard-earned money. And if you don't have time, then I don't believe trading is not for you. It's for you because you only need 1 hour a day. If you can work 12 hours for someone, why can't you put in the work, find a good mentor who will be interested in helping you achieve success and trade with them? Learn their system and let them help you rather than trying to entrust your money to scammers. Alright, so this is going to be the one-stop risk management for you ever need if you have a solid trading plan. And then risk management, money management. Okay, so for demonstration purpose only, we are going to use so first is going to be, let me see, account size, and then I believe I'm going to talk about we have the low risk, so that's going to be low risk. Then we're going to have a medium risk. We're going to have high risk. Okay, high risk. Then we're going to have the blue account, or maybe let me use extreme risk. Okay, so for demonstration purpose only, let me put down here also the key. Okay, so that or when I finish I'll just put the key down. Okay, so let's say we have $100 account size. Okay, we have $200 account size, you have $300 account size. No, let me see. Yeah, you have $300 account size. The lot size, oh sorry, for a low risk on this. Okay, you need 0.01, which is 10 cents, and medium risk you might need 0.02, and high risk you might need 0.03. This is $100 account, sorry, $100, sorry, let me go back. Yeah, so $100, and this is the blue account strategy. You are going to probably 0.4. okay. I need to just, sorry, let me make this bold, let me make that, yeah, extremely, then the rest I'll just make all of them bold. Okay, so if you have $200 account, you are going to use 0.02, and here you might use for medium 0.04, and here you might use let me say 6. Okay, and here you're going to use about so you see what I'm driving at, you're going to use like 0.8. okay, that's if you want to blow your account. So this goes all the way, as you can see, you have all to 400, so 500, 600, 700, 800, 900, up to $1,000. So if you have $1,000, you are using 10p here. Okay, yeah, you are on the low risk side, because you have $1,000, you are using 0.10, and on the medium risk you are using 0.20, and on the high risk you want to use 0.3. okay, and here if you want to use probably 0.8 or 1 point, let me see, 1.0 if I put it that way. Okay, so it's more of in the multiples of 3. So there might be exception. Okay, an experienced trader who knows how to manage their risk, who understands the market, who has been trading for long, like myself, when I have $1,000 account, I can do this. Okay, so let's see. So what we are talking about here, okay, the two probably stuff that I want to we are talking about the lot sizes, okay, and then we will talk about the risk reward, which is the RR. Okay, so now I am talking about the lot sizes, then we'll go to the charts after everything, and we'll do some case study. Okay, so an experienced trader who knows what he's doing, who is a full-time trader, who understands the market, who has been trading for long, like my mentor, he turned by trading features, he turned $10,000 into $2 million in less than 12 months. Okay, He knows the market like he knows the back of his hand. So he understands what he's doing. So he or someone who is very experienced trading might do this here. On 10 lot size, they might go 1 point, okay? But I'm talking about new traders who have just learned how to trade and you are trying to find your way about the market. You don't have to be in a hurry to make money. You have to be in a hurry to learn more rather than being in a haste to make money. Because if you go use lot sizes on the extreme risk or blow your account, you're going to blow your account very, very quickly, okay? So you have to learn more. You have to understand risk management. You have to understand money management, because this is what is going to keep you in the game more. When we start doing the case study on the risk reward, you understand, okay? So learn more. Don't be in a haste to make money. Just understand what it is that you are after. Understand that you are going to lose. You might not going to have 100% trade. Even your own system, which is accurate, is going to give you losses sometimes. But if you have a good risk reward, if you have good risk management, which is the key to trading, then even if your system you are using is a 50% success, okay, or accuracy, you will still end up making money. So having spoken about that, let's go into the risk. We've covered this, the lot size. So let's talk about the risk reward, or what do I mean by RR. Let me, yeah, okay, so that is I think it's not a good color. The yellow is not a good color, so maybe let me make it black or just leave it as it is. Yeah, risk reward. So risk reward, okay, let's assume someone who is having 100 account, okay? So risk reward, let me put it here, and then let me look at what we can achieve here under the risk reward, okay? You can have, okay, someone can have 1-to-1, okay? This is for experienced traders, risk reward. Someone we have the 1-to-2 risk reward. Trader 3 can have 1-to-3. You can have 1-to-4, 1-to-5, okay? So and you can even go as far as having about 1-to-10 risk reward, which I do get it in my personal trading. So 1-to-1 risk reward means that if you are risking, let's say, if you have $100 account using the right lot size, if you are risking $2, okay, your gain is also $2. And this for me is not for beginner traders. If you have just learned how to trade, remember, trading, you are money managers, risk takers. You need to learn how to manage your money, okay? So this is for high experienced traders like myself, or anyone who is experienced traders, and we use this for scalping because we're doing high lot sizes. For instance, I can do 50 lot size, or 100 lot size, or 20 lot size, or 10 lot size. It's for me personally, I'm just scalping. So I'm risking, let's say, 2,000 to make 2,000, and sometimes even I risk that 2,000 and I make 6, 8, 10, or 20,000, because I know what I'm doing. But if you are a beginner trader, what you have to start with your risk reward is, for every $2 you lose, okay, you risk, you want to gain $4, okay? you want, we'll go to the we will go to the chart. You want to gain $4. So when you do this, okay, let's say at 50%, the strategy you are using is 50% success. Okay, it's 50% success, which means that if you place 100 trades, you get 50% correct and you lose 50%. So if you are gaining 50%, okay, because you risk 50%, if you place 100 trades, you are losing $100, okay, but your gain is $200, okay, that is 4,520. Okay, so do you get what I'm saying? If you have a sound risk management, if you have a sound trading system in place, and you apply good lot size, not being greedy as a newbie, and then you start with not one-to-one, that is for experienced traders. So I don't recommend anyone who is starting to learn how to trade to use. That's why I have put it in red. It's only for experienced traders who scalps the market, so they can do the one-to-one because they know what they are doing and they understand the market. But for a newbie, this is what you do. So if we jump, okay, and we come here and we look at the same case study, okay, right, good, you are risking, your system is your risk reward is 1 to 5, which means for every $2 you risk, you gain $10 back. Okay, so if your system is 50% accurate, okay, it means if you are trading or you are putting in 50 trades and you lose $100, okay, now 50 times 10, okay, is what you are gaining $500 back. So at the end of the month, if you deduct the 100 that you have lost from the 500 that you have gained, you are still up $400 profit. This is, I'm using account scenario of just $100 account size. Okay, so you can see the power of good and sound risk and money management. Once you put this in place, you understand everything. And if I want to do, remember the key here, the LR is low risk, MR is medium risk, HR is high risk, and this is the blue account or extreme risk. Okay, so this is the strategy that if you are a newbie and you want to adapt, you are going to lose your account in 2 minutes. So if you stick to proper money management and risk management, it is very highly unlikely for you to blow account, because at the end of the month you end up in profit. At the end of the month your system will end up in profit. Okay, so let's go on to the charts. Okay, then let's try to apply a case study. Okay, so let's come here. Hold on, someone is at the door. My friend Brad George, now me clean it bathroom now. Toilet seats not split. Okay. All right. So sorry about that. Let's catch up. Yeah. So first you find your trade. Okay. Let's say you are buying here. Your entry is here. So your stop loss is here. Oh no, here. Okay. Your stop loss is here. So this is your risk. If you calculate, this is your entry. So this is your probably how much your risk here. So now by doing 1 to 2, this is this will be your reward. Okay, so you risk 1, which is how much, about 29 pips, and you are gaining 2 times that. Okay, so a newbie, this is what you have to always focus on. Okay, so if you are doing 1 2 3, that is according to your trading plan. This is your trade. You buy here, you have your risk here, you have your 1 to 3 here, and if you are doing 1 to 4, this is your what you are risking, and this is what you were gaining. If you are doing 1 to 5, this is your risk, and this is your reward. So you understand how easy and simple it is. So I didn't complicate anything for you. We've done the calculations, and it's the same opposite. If you are doing a sell, let's say you were selling this market from here, so this is your risk, 1 to 2, this will be your reward. If we are going for 1 to 3, now this is your reward. So you wait for the market to be at 142.1. If we are doing 1 to 5, this is your reward. You wait for the market to be 141.8. If you are doing 1 to 6, 141.4, this will be your reward. So for 1 to 1, as I recommend, it's not for newbies. No, it's not for newbies. It's for people who are highly experienced in the market. So that was why I use a red marker to market that this is a stay away area. It's not for a newbie. So I don't think there is much more for me to talk about. If you have a solid plan or a solid system in trade, risk management is what is going to keep you, is what is going to make you last in this game, and is what is going to protect your account. Remember, as a fund manager, your ultimate goal is to protect your account, not blow it. So those of you who wanted me to go over risk management and stuff like that, it's as simple as this. This is the one stop. I've made it very, very simple for everybody to understand. So don't be in a haste to try to make money in the market. Be in a haste to learn. And remember, mistakes do happen. It's part of the game. Failure will never apologize to you. Failure happens to us because it's teaching us a lesson. Try to learn the lesson that you are being given and follow your street rules. Learn more than you trade, and find a good system and stick to it and apply these rules, and you're going to be successful like and share the rules, and remember, do your due diligence. Do not send money to anybody who tells you they are going to double, triple, or quadruple. Find time and learn, and I believe you're going to be successful. Have a good day, and I'll see you soon. Bye bye.